What's going on, everybody? So 2 trades today, OUT. This is a paper trade in front of us. I'll show you guys here after the intro. Well, let's get to it. All right, traders. So as you can see here, just letting you know, FLIR kind of getting back. Looks like we're actually going to stop out there. There you go. So kind of just testing out the old system with some new implications within it. So you can see like the 112 here, as well as we covered that 75%, looking to trade the pivots on the way out. Made a pivot here at this 50 area, came up, tried to retest it again. It actually got shoved all the way back down to some new lows. So technically this could have been our new pivot, but we just left it there at the $0.50. And as you can see, it went through. We actually, or I just got rid of it. I was gonna say I think we might've got some slippage there. Yeah, we did. We got 3 cent slippage. So that ended up being a decent one. I think that was one of the things that I would struggle with, is trying to figure out the sizing to be consistent. So that's kind of what I was trying out here to see what we could do to get around the same levels that I am comfortable with as far as the set risk goes. Because if any given trade wants to go against you, I still believe 100% that you need to have a set risk. There should be that amount that at any given time, if a trade is going against you, you hit that amount, that's it, cut it. You can get back into that trade if you want to, but for that specific trade, you need to have a set risk. I will always believe in that, and that's just how I am. That way you can't blow up, right? Risk management, it's number one. So anyways, over to OUT. Pretty self-explanatory trades, little emotional exits. So the first one was very self-explanatory. We were just early using the set stop, set risk of the 1R there. As you can see, we just got stopped out. Now, just like yesterday, ADVN, I can't remember the ticker, but just like yesterday, we tend to maybe jump into something a little bit early after we just get stopped out, because we know that if we're getting stopped out, that means it's making the move that we wanted in the first place, right? We want the big extension. So if it continues and stops us out all in one move like this, we don't want to not be in the trade. It just so happens that we hit that set risk area that I was just talking about, which is one of the problems with using the system that I'm using now. And it's something that I'm starting to see as an issue, where if we would have just, say we started really early like we did here, and then we added here, and then we got one more add up here at the top, this would actually look pretty good, because our average would be somewhere up in here. And on the way back down, we can scale out for a nice profitable trade. But in this case, for what we did do, we started the trade again here, let it go up against us. We actually had our stop sitting there at 1587. So we were 3 cents away, thought we were going to get stopped out. It held strong, and as it came back down, it was such an intense move down, we took off half of our position here just to limit the risk, assuming this was going to pop back up and maybe give us like a sloppy seconds type trade. But as you can see, that's not what happened. This thing just kept on dying, and it went down to VWAP all in this continued move. And I said, man, if we get that break of 15, it's going right into VWAP. It's about 50% of the move given back. This thing is going to bounce there, right? That was what I had said in my head. Instead of playing pivot points or anything, that was what I told myself. So it was an emotional second cover as well. And as you can see, that does not look anywhere near what we need to get back from the first trade, and it wasn't. So as you guys saw, let me pull it over here. Right there, OUT. So the first trade, we got a little slippage on the way out. I think we were down like 31.50 after that trade. And as you can see, we only got back to 23.80. So we made maybe almost a third of it back on the second trade. So, and the worst part is, if we would have been sticking to just the 1-1 like we did here, technically we lost 1R, but the system was, we either lose 1R or we make 1R, and that's the thing. We hit the button, and either we're right or we're wrong. If we would have did that here, we would have made the 1R when it came down here. It went down. Oh yeah, it did. It did go through, because it would have been at 62, I think it was, right? Yeah. So Just unfortunate. I think I'm starting to think too much, trying to maximize this specific strategy a little bit more. I think if you keep it at a 1-to-1 system, it's better that way, but it's still not that profitable in the long run. I feel it's turning out to be like it's really hard because on a lot of these fronts, if you're trying to play the front side, you're going to be early a lot, and it's going to lead to a lot of losers. So you're going to have to do what I have been doing, and that's getting back into the trade after you already took a loss. Now, the problem with that is, say you take 2 losses on the way up because you were early, and then sure, you nail the top the 3rd time, but you only get 1 R out of it. You're still down 1 R from trying to play it 2 other times on the front side. So it just doesn't make sense, right? So that's what I'm trying to figure out. If this is something that is viable to keep using. It just does not seem to be the case over the course of, we're at 57 trades in, and I'm starting to just kind of see a pattern with it. Now that we've kind of traded a bunch of different tickers, a bunch of different ways. Obviously, we were right a bunch of times, but the times that we were wrong, it tends to be the same thing over and over again, where we're early, could be early again. The one day you saw we were early like 4 times, and then we tried the descending triangle twice, and we were wrong 6 times on the same ticker. So that was a little bit of over trading there on one ticker, but it just goes to show you that your conviction can be there on a specific trade, but it doesn't necessarily mean it's going to work. And when you're using this system where you have a set stop like that, it's going to get hit a lot, because on the front side, it's not done until it's done, right? So if you're trying to time it perfectly every single time, it's just not going to happen. So that's all I got for you today. Like I said in the live stream this morning, which you can watch up there, the live trades will be timestamped there. These 2 trades on OUT. And we're going to be talking about this tomorrow night, just strategy moving forward. And like I said, we took that second trade there or the paper trade here on FLIR, just as kind of a way to dip our feet back in the water just to kind of see how it felt. And maybe next week we'll just paper trade. Who knows? And it looks like we got a little bit of a fake out there. Oh, I mean, it went all the way back up to the highs. And that's the thing. You have to respect your stop loss, because sure, there's going to be times where this pokes through and goes straight up the high of day, and it's a fake out and comes all the way back down and continues down to 45 the rest of the day, right? But how many times do you see it make a squeeze like this and it goes high of day and goes all the way up to 50? Like, it happens, right? You don't know what it's going to do. It's going to do what it wants to do. Unless you're one of the ones with some big money and you're the one stuffing this down or, pushing it up, you don't know what this is going to do. Us little retail traders are along for the ride once we're in the trade, right? We can only put ourselves in the higher probability positions. That's it. So that's all I have. Like and subscribe, guys, if you haven't already. Always appreciate that support. If you have any questions or comments about all this mumbo jumbo I just put out there, feel free to leave that down below, and I will catch you guys tomorrow morning. Peace.